Yo guys, happy Sunday. It's your boy Stas here. Got the double espresso on deck. Cheers, by the way. I appreciate all of you for tuning in as we have to break down 5 companies, 5 stocks I'm watching this week, all of which are reporting earnings, and we have to go over my game plan, the market, overall what the heck's going on. So guys, hit the like button, make sure to subscribe, and let's get into it. Oh, by the way, check out the Patreon if you want to keep up with my portfolio updates, the Discord, all of that linked down below. And with that being said, let me clear my throat. Cheers, guys. Take a sip of your coffee and let's dive into it. So, as of now, you guys probably know the market has been bouncing back over the last couple of days, really the entire week last week. Even though we had Thanksgiving, the market was closed on Thursday, half day on Friday. We had a very good week. And Friday, not this past Friday, but the Friday before that, heading into the holiday week, was also a very strong day for the market. So we had many days in a row of green, and at this point, SPY, QQQ, all these indices are starting to break back out. You guys can see on the 5-day, 5-minute, we were making higher highs, higher lows, really the last couple of days, right? Like I said, the bulls have really been notching things up here, and on the 1-hour chart, we're starting to break through this downtrending channel. You guys can see it right here. We have a golden cross. We're breaking through the channel on SPY and on QQQ, right? Same thing on QQQ. So we are starting to see the reversal. It's happening. It's right here before our eyes, guys. And, same thing on QQQ. Golden cross, right? Breaking through multi-day high. So this is a very good sign, heading into this week, heading into December, right? The rate cut we're potentially going to get. Things are lining up quite nicely for an end of the year rally, We had a huge month of September, massive month of October, and November was rocky, no doubt. We pulled back all of November pretty much, and now, again, we're setting up for that push, especially, I think, if we get this rate cut, guys, since it's not 100% baked in, 100% guaranteed, it's more 50-50. I think if we get this rate cut, the market's really going to take it well and run through the rest of the year. Maybe we go back to all-time highs. I don't know for sure, obviously. I don't have the crystal ball, but, I mean, it's not too far-fetched to say that. QQQ needs another, 2.5%-3% to get back to all-time highs. SPY needs probably less than that, 1.5% maybe. Not even. Yeah, it's less than 1% away from all-time highs. So, guys, we're probably going to hit those highs. It looks like we're going there before the end of the year, especially on SPY, and I'm sure QQQ is going to follow. So we're looking very bullish. The gist of it is, guys, we're looking phenomenal. We had a big month of November in terms of selling. Now we're starting to reverse that and reverse course here, which is ideal on SPY, on QQQ, the Dow as well. I mean, guys, if you look at the Dow, this thing is pretty much right back to all-time highs as well, about 1.5 percentage points away. And the Russell is right there too. We're 40 points away from all-time highs on the Russell, about 2%, a little less than 2% away. So, yeah, I mean, if I had to guess, I think we're hitting all-time highs again this year, before the end of the year. So that's a quick rundown on the indices. What do you guys think? Let me know in the comments down below. Let me get a quick sip of this coffee. Cheers again, guys. All right, now let's break down 5 companies, 5 stocks, all of which are reporting earnings this week, and I'm watching as close as possible. So number 1 is CrowdStrike, ticker CRWD, which, looking at the charts, guys, looks very good heading into earnings. CrowdStrike just hit an all-time high, I think, in the middle of November. So believe it or not, CrowdStrike was actually holding up this month up until the 12th of November. Then we started selling off aggressively from 566. Now we're at 509. So we are down about 10%, just on the cusp of correction territory right now from all-time highs. About 10% drop. And we're still maintaining the uptrend. We're still in this channel. You guys can see it right here, right? Higher lows, higher lows, higher lows. So CrowdStrike at this point, yeah, we're down 10%, heading into these earnings, but honestly, that's a pretty good setup. We're a bit oversold. Earnings are on the 2nd, which is what? Tuesday after the bell. So I feel like since we're down 10%, pretty beaten up, I think if earnings come in strong, guidance is solid, we're setting ourselves up for a nice rebound on CrowdStrike, especially as the overall market is recovering. It's rebounding. The VIX is coming down, which is ideal. The volatility index is not over 20 anymore, guys. We're back to 16 on the VIX. So analysts have CrowdStrike doing earnings per share on average of 94 cents versus 94 cents from last year on revenue of $1.22 billion versus $1.01 billion from last year. That would be up 20% year over year. Pretty good, guys. CrowdStrike still growing 20%, but is it good enough to justify this valuation? I don't know. That's the $1 million question. You know, you guys probably remember I was in CrowdStrike for about a year. I held the stock. I bought it in July, not this past July, but the July before that, after the IT outage. Do you guys remember that? The stock cratered. I bought in pretty heavy at this point. Yeah, back in this time, it got down to like 190, 200. So I was buying on that dip, on the rebound as well. And I sold right around $500 a couple months ago. And yeah, it ran up more since that point. I thought it was a little frothy when I sold it, and it actually dumped pretty aggressively after I sold it. Funny enough, it was this time period here. I'm pretty sure it was over the summer. So yeah, I held it for about a year. It pulled back, now we're rebounding. Well, I guess we pulled back again, but we saw a rebound after that initial pullback. But yeah, the trend looks good, guys. And honestly, at this point, I'm probably not going to buy it again as a long-term investment, at least at these valuations. But as a swing trade, yep, it's on the watch list, guys. CRWD. I really like the charts here. So expect about 20% revenue growth out of them. CRM's another one for this week, which has just been demolished. I mean, this stock's been down all year. It has not participated in these, in this bull market really at all. And we hit all-time highs, it looks like, at the end of last year. So literally, guys, heading into 2025, CRM was looking hot, all-time highs. Investors, were happy as heck, right? Sentiment was high, and it's just been downhill since all year, literally for a year straight. CRM's been just destroyed, down 40%. And the thing is, the charts, the 3-year chart doesn't look good. We have a head and shoulders here, clear as day. But if you look at the max chart, it doesn't look that bad. It looks like we just got way too hot at 370. Now we're coming back down. We gave back a couple years of gains, which does suck, but technically we're still, maintaining an uptrend on the max chart. But honestly, guys, for me, I want to see CRM's earnings come out. I want them to show me, right, what these numbers are looking like, the guidance, have them put a quarter, 2 quarters in a row together that are strong quarters for me to even consider this, because it seems like the stock just can't break the trend. It needs a big catalyst, and I'm like, will we get it this quarter? Will we get it the next quarter? Analysts have them doing EPS of $2.86 versus $2.41 from last year on revenue of $10.27 billion versus $9.44 billion from last year. That would be growth of just under 9% year over year. So yeah, they're still growing about 8-9%, not nearly as much as they once were, obviously, which is definitely pushing down the stock price. And on top of that, there's competition. The moat isn't as strong as it once was, I would say, for CRM. So there is, we're noticing some cracks in the business, if you will. So I'm not necessarily going to buy this stock as a long term. I'm not really interested, quite frankly. But maybe as a trade, if it's able to really start to break through this downtrend, which we're really not showing any signs of that as of now. So Snowflake is stock number 3. Let's pull this one up. Snowflake looks great on the charts, first of all. We're maintaining an uptrend. If you guys take a look at this channel, if I draw it out, boom, how nicely are we in this channel, guys? You couldn't draw it any better. This is textbook, right? We hit a 282 high here. I don't think that's the all-time high, but we hit that high on the 4-hour chart. Then we saw a pullback, only to then maintain the bottom of this channel, making higher lows, the whole 9 yards. And now we're starting to see some momentum off this low from a couple days ago, but still technically we're in this downtrend. If you guys take a look on the 1-hour chart, still technically in this downtrend, lower highs, but we do have a golden cross trying to form here. And really, I'm just waiting to see if it pushes through. I would say 260. I think 260 to 265 is the breakout spot on this stock, Snowflake. So keep your eyes on that. I set my alert at 265. Their earnings are on the 3rd, so that's on Wednesday after the bell. I forgot to mention, I think CRMs, did I mention what day they were? They might be the same day. Yeah, they're the same day. They're Wednesday after the bell. That's CRM and Snowflake. And when it comes to the analysts on Snowflake, guys, listen to this. Analysts have them doing 31 cents of earnings per share versus 20 cents from last year on revenue of $1.18 billion versus $942 million from last year. That's up 25% year over year. Pretty good growth there out of Snowflake. And yeah, I set an alert at 265. I'm going to do another one at 260. We'll see if it's able to continue this uptrend. Something's telling me it is. We'll see, though. We're not fully breaking out yet for that leg up, but we're getting there. So that's Snowflake, ticker SNOW, and stock number 4, guys, is Kroger. And by the way, if you haven't hit that like button yet, hit that like button. Make sure to subscribe. Follow along for more content. I appreciate you all for tuning in. And without you guys, this would not be possible, obviously. And if you want to check out the Patreon for my portfolio updates, we're investing thousands of dollars a month, guys. There's a Discord, all of that. Link down below. Also pinned in the comments. It's only $10 a month or $20 a month, depending on the tier you sign up for. And I guarantee you guys will find value in the Patreon, in the Discord. Again, link down below. So Kroger is this week. I believe they could be tomorrow. Actually, no, I'm wrong. They're on Thursday. Okay, I'm way off. Thursday in the morning, we have Kroger's earnings, ticker KR, and we can see we have a little bit of an inverse head and shoulders kind of in the making here on Kroger. You guys see here KR. It's not the cleanest cut inverse head and shoulders, but, I'm kind of seeing it here nonetheless. You're noticing that, and we can see that we're pushing through these moving averages, and now we're actually seeing a little cup and handle action, arguably. Cup handle. We're approaching a multi-week resistance at about $68 a share. Look, man, if we break through that point, this could be off to the races. $70 plus again. But we'll see what these earnings are looking like. EPS, the analysts have them doing $1.03 versus 98 cents from last year on revenue of $34.24 billion versus $33.63 billion from last year. That's up about, 2%, 1.8% year over year. Really not much, up much at all. And on the 3-year chart, Kroger, you can see it kind of went up a lot throughout 2024 into the first half of this year, and now it's kind of been selling off, giving back some gains. So let's see if earnings are good enough to bring this thing back up. Ticker KR looking decent on the charts. It's not a phenomenal looking chart, but we're starting to see some momentum building up. I'll set my alert at $68 for now, and we'll see what happens at that point. And at number 5, DocuSign, ticker DOCU. DocuSign is clearly downtrending. It's been downtrending all year, probably on the 3-year chart as well. Actually, I just assumed it's not on the 3-year chart, but it's been downtrending, I guess, on this chart, on the monthly chart. Holy moly. Do you guys remember COVID time? My goodness, the stock got to 300 plus. But yeah, if you look at it on the 1 year, Clearly not the best stock recently. On the 4-hour chart, not looking too pretty, but I am watching it this week, guys. On Thursday after the bell, they have earnings. So Docu, they have EPS at, let's see, analysts have them doing on average 91 cents versus 90 cents from last year on revenue of 807 versus $754 million. That would be up 7% year over year. Not bad, but obviously not great, for a growth company, quote unquote. The growth has really evaporated, and DocuSign, this is one of those stocks that will never, in my opinion, but honestly, I think it's everybody's opinion. I don't think it'll ever get back to where it was a couple years ago. There are a couple of stocks like that, that got up way too much during that time that I think will never get back. I think DocuSign's one of them. I think Zoom's one of them. I think, Teladoc's one of them. These stocks had ridiculous runs years ago, generational runs, but will they ever get back? No shot. That's the thing. That's the thing when you're investing, guys, and I'll leave you at this with this. If you're buying risky speculative stocks and you're like, oh, it's going to get back to all-time highs if it's down like 50% from highs or 80%. You're like, oh, it's going to get back. It's going to go back, right? Not necessarily. What's this one? Teladoc and DocuSign. You might as well use DocuSign because that was the example for the video. DocuSign hit 315. Now it's at $70. It's down 75% from all-time highs, right? So this is where the novice investor gets wrong. They're like, goes wrong. They're like, it has to go back up 75% for me to recoup my loss, right? Wrong. It has to go up hundreds of percent for it to get back to 315. And if we look at Teladoc, this will be a funny example. It's down from $308 to what? $8. So we're down 98%, 97%. For this to get back to all-time highs, Teladoc has to go up 4,200%. Yeah, it's not happening, guys. It's not happening. So be careful when you're investing in the stock market. Not saying every stock's just going to collapse and then never get back to all-time highs, but there are stocks out there like a Docu, like a Teladoc. Well, maybe DocuSign gets back to all-time highs. I don't know. 300% is still a lot for DocuSign, but never say never. That's not that unrealistic. But Teladoc, to go up 4,200%, it's not happening. So be careful. Be careful when you're investing, guys, and keep that in mind. So with that being said, cheers, take a sip of your coffee. I appreciate you all for tuning in. Join the Patreon, link down below for my portfolio updates. Guys, I'm telling you, it's a no-brainer. Make sure you guys sign up. There's a Discord as well. I'll see you there. And with that being said, have a great rest of your day.